Now I'm going to take you into order flow. More numbers, more interesting things, more power. Volume breakdown, we talked about it, bid volume and ask volume. And I'm going to just quickly ask the question to make sure we're all on board. When I have more volume at the bid transacted than I do at the ask, who is the aggressor in the market, the seller or the buyer? More volume at the bid. Seller. Excellent. Seller. The seller is the aggressor. That's a very important thing you should keep in mind. Okay. I have a good friend here that likes candlesticks, so I always like to go back to them, and this time I'm going to pick on a 30-minute candlestick, and we're going to dissect it. All right. That same candlestick that you just saw, that same exact candlestick that we just saw, I am now going to look at a footprint of that candlestick. Or imagine taking an X-ray of the candlestick to look at exactly what was going on inside that candle. If you take a look inside the candle, you will see that there are two numbers, one on the left-hand side and one on the right-hand side. On the left-hand side, that's all the transactions that take place at the bid. On the right-hand side, these are all the transactions that take place on the ask for that specific candle. Now, when we were looking at the volume at price chart a few minutes earlier, that was the cumulative for the price, not for each candlestick. Anybody have any questions on that? I hope I'm not confusing you. Okay, so the earlier chart was just at that price, what was happening at that price. So if we took the cumulative effect on a particular price across 5 or 6 different candles, that was what we were looking at. Now, I want to look at each candle on its own and see what the profile will tell us. Okay, so here's again, we started out with this 30-minute candlestick, and that's where it is on the chart, 30-minute footprint. Now, I'm going to put for you what happened at each price level within the candle and show you how we analyze that. 17 different price levels. Okay, 1, 2, 4, 17. Here's where we opened, and you can see it in the candle right here at this particular level. And the total traded volume at the open, I simply add both up. Okay, 1,115, 1,088. The next question I'm going to ask you, at the open, who was more dominant? Who was the aggressor, buyer or seller? Buyers. Buyers, because the ask was higher than, more transactions were taking place at the ask. And the total volume is 2203. Now take a look at the close. All right. Who was more aggressive at the close? The buyer. Very good. Now, what else can you tell me about the total volume at the close? How is it relative to the open? Okay. Very good. So we have 8,093. How much higher? Remember what I told you about volume increases in the direction where the market is facilitating trade? All right. Now show me any candle in the world that'll tell me this stuff. Doesn't exist. It doesn't show me. Now I can even tell you what the volume was like at the open for the candle, at the close. Are we increasing? Who's the aggressor at each of those levels? At the end of the auction, who is actually more aggressive? And now it becomes a no-brainer. What do you think is going to happen on the next candle? We're going to move higher. All right, now you're getting the catching the drift and the trick. Total volume helps us to gauge the level of participation at a price level. It is important to understand the breakdown of the volume. And just to prove what we were saying earlier, I'm going to go back and show you what happened after that candle right here, what ended up happening after the candle. This is the candle that we were looking at. We analyzed the numbers, okay? And by the way, the green line, this is where it opened, this is where it closed. I did it by the numbers. You know, paint by numbers? Now you're learning to trade by numbers. So this is where it opened, this is where the candle opened, this is where it closed. We had a wick above it, and sure enough, prices come back right to the close, and things start to move higher from there. And you could see it from the candle, from the inside of the candle. If you were only looking at the candle, you would see a wick, you would see another little wick here, and I don't know how strong of a pattern that would have been for me. Would I be ready to take a long based on that candlestick pattern or not? In my case, I guess I would have been a little dubious, but maybe somebody else is bolder. Nevertheless, when I see the numbers, though, I'm a lot more comfortable, and it affirms my decision for me. Now we are going to take a closer scrutiny of a 30-minute candle, and we're going to create a profile. The question was asked earlier, can you do this on different time frames? Now you're going to see a 30-minute profile. So a little tiny profile, 30-minute profile chart. Okay, I'm going to ask a quick question here. Am I doing this, how many letters do you see in the 30-minute profile? A, B, C, D, E, F. How many letters? 6. So if you divide 30 by 6, what number do you get? So my periods are 5-minute periods, okay? So this is a 30-minute profile using 5-minute period. Now, we're analyzing, this is the very first bar of the day, letter A, initial balance, first half hour. Because remember, that's very volatile. We want to know what's going on, what's happening in the market. This is the open bar for the day, and we want to know where is value likely to go. Okay, I already hear down, but you're a little faster than me with the analysis. We'll see if your analysis is correct. Short-term value analysis requires a close look at a number of variables. So let's take a look. What are those variables? First one, point of control is below the open. Where's my open? Right here. And the point of control is down here. How is this? Why is this significant? Point of control below the open. It is bearish, by the way, so you're right in your early prognosis, but we want to build it on solid fact. The bulk of the activity that's taking place, even within this brief, short period of time, is really on the lower end of things. You know, the pressure is more to down rather than up. And my point of control is below the open. That's the first indicator. Not only that, the value area, the entire value area for the profile, guess what? It's below the open. Okay, another negative variable. Single print above the open. The market really didn't facilitate a lot of trade to the upside at all. Okay, and by the way, here's the data from the footprint on the left. So I'm looking at the profile, and here's my data. And just to help you with the footprint, if you notice, it all has shaded red in the background. The shading is to indicate the intensity of the delta. So if it's a negative delta, it'll be red. The more intense, the bigger the delta, the darker the red. So this is where the darkest color is. That's the darkest red. If we have light blue, or it looks greenish here, then that is positive delta. So even from the deltas and the shading in my footprint, this is very negative. And look at how many other things are indicating to me the price drop. Do you see how much more I can see with the profile? Just incredible, incredible amount of information. More red levels than green if we were to count. So that's certainly a negative. Close below the point of control. Here's the close, here's the point of control, that red line. And close below the mid-range of the initial balance. The mid is about here. And by the way, you will always see this on the profile, that little dot, and that's the mid of the range, so we close below it. The more you see this stuff, the more you say, you know, I can now short very comfortably. Now, I don't want you to think for any instant that I'm saying this is a reversal. Remember, what time frame are we looking at? Right, so this is a very short-term trade. This is not you know, something to hang your hat on. This is not how you're going to make your income for the next year. This is a very, very small time increment. But the purpose of this is to demonstrate that the principles that we apply to the profile work on different time frames, be they small or large. I don't give a lot of weight to the numbers really while the candle is still open, because it's a work in progress. That could change in an instant. So be very, very careful, especially when we get into short-term trading like this. You want to wait and not rush to conclusion, especially also since this is the very first period of the day. Things could change in a glimpse of an eye, and quite often what they will do, the change will take place in the last 2 or 3 minutes of that 30-minute bar, because they want someone to make a hasty decision and then they want to trap them. So how many times have you seen that happen? The bar looks like it's going to continue lower and everything looks negative, and then all of a sudden volume comes in, the dynamics change, and life looks rosy and things shoot up. Let me address what the zero really means. Okay, when we came down to this price level, somebody bought at the bid, but there were no transactions at the ask. So let's not read into it much more than that. If in fact the candle had closed and this was the case, you know, then you are right, the market isn't really facilitating trade much lower, and it could be that the next candle is going to take us higher. But I have to wait for the close to be able to make that assessment. Basically, same thing here. I didn't have any transactions at the bid, but that doesn't mean that the buyers are strong, and you know I actually have to witness the ask start to go higher before I begin thinking a long position. So you know, in short term, don't be very careful about interpreting more than you can from the numbers, and you want to take a look at a cumulative set of data. Remember, some people will put a ton of indicators, and all the indicators are telling them the same thing, and they just have 5 or 6 of them confirming the same thing. Here we're really looking at a variety of different things. All right, now here is the bid volume, and that's on the left-hand side. I just copied the numbers to highlight them for you, and a total of 10,5480. This is when the candle closed. Now, notice also that when the candle closed, how that bottom number changed quite a bit. It wasn't the same number that it was before, right? So that's why we don't want to put too much weight on that. Okay, so we have a negative delta. The negative delta is minus 10.95%. How do I get the percentage of the negative delta? I take the total delta divided by the total volume, and since it's minus delta, I add this column up, I add this column up. The difference is minus 20,833. Divide that by 190, there's my negative delta. And here's my total volume down here. Here's my negative delta. I don't have to sit and do all those calculations. The software does it for me. But if I want to quickly get the percentage, I may have to do that by hand. There is another indicator in the software that will do that for you automatically. It's known as the footprint bar statistics, but I just didn't put it on here. The cumulative effect of all these things is, yes, we are probably likely to drop lower. So we have a negative delta. Volume and price value areas are about the same. Notice the volume and price. On a 30-minute, that's often the case. There's now a high probability that price is likely to drop about 1 standard deviation, approximately 3 to 4 ticks below the low of the bar. Let's monitor what happens. Now, why 3 to 4 ticks? Because this is where value was, and now we've deviated, we're going below outside value, so I know that at least I'll get 3-4 ticks out of it. And the reason I want to highlight that is so no one gets carried away and thinks there's a major reversal here. And the reason why, also because for the first bar of the day, 190,000 volume is low. So I'm not seeing smart money, I'm not seeing any major participation in the market. But you really would have to know some of these things to be able to come to those conclusions. And if you are a student of the profile, you typically will get to learn, these are the kinds of things that you look at and you get to know. You become intimately familiar with your instrument and its practices, patterns of behavior, and so on. And price, sure enough, drops immediately, and it does do the 3 or 4 ticks that I had anticipated. And now I want to draw your attention to the change in color in the bar. Do you see the green start to appear? So if you were inclined to think, I'm going to be short for the day, you ought to change your mind very, very quickly. All right, this big green activity here should alert you. We have positive delta coming in. Even though we do get a price drop, it's just temporary for that one candle. Value area drops, but there's no overlap. And notice also something interesting. The second period volume decreases. What do we know about volume again? Does volume increase or decrease in the direction where the market is facilitating trade? Decreases. So volume didn't increase as we dropped, it decreased. So obviously, we're now probably going to start heading higher. All right. Falling volume signals trend weakness and unlikely continued expansion of the value area. More green price levels. Okay. Our POC points of control now, notice, are starting to merge. They're starting to come closer. We're coming up to them, not deviating away from them. Notice all these tidbits, much smaller negative delta. Does anybody remember what it was in the first candle? About minus 20%, wasn't it? And now you're at positive 0.86%. That's quite a variation. Much smaller negative delta, 0.86%, and we have a rotation factor of +2. Anybody familiar with what a rotation factor is? No one has come across that term? Okay. In an auction, the auction is always rotating up, rotating down, and so we take a look at, and by the way, these profiles, the way that I have them, I split them. It's called as a split profile. So you see each column, each letter, each period as an independent line, almost kind of like a bar. So it would be easy for you to see it. Now, take a look at the second 30 minutes. And we have period A, it drops. Now, period B is an inside period. What do we mean by an inside period? Excellent, very good. So in a rotation factor, that period would get 0 and 0. It didn't break the high, it didn't break the low. So 0, 0. Now, the next one, period C, It broke the high, right? So it gets +1 at the top. Did it break the low? No, right? So it would get a 0 there. Okay, because it didn't break the low. Now, so we have a +1. No, but it actually would get a 1 because C is higher than the low of B. So C gets a +1 and then a +1. So that makes it, it gets a +2. Now comes along D and it drops -1 and then another -1. So now we have what? -2, okay? And then E and F are 0, 0, 0, 0. So a rotation factor is a -2 + 2, that's 0. That's a rotation factor of 0. If you get a positive rotation factor, the market is likely to continue to move higher. The rotation factor calculation carries a lot more weight on higher time frames than it does on the shorter time frames. But at least now you are familiar with how we do it by looking at the range highs and the range lows and which are taken out. In this case, the total rotation factor is 0. So there's really not a lot of momentum. There's not a clear direction yet in the market. And there is nothing wrong at all about staying out of the market when things are not clear. So the key lesson here is even when things are not clear, the profile will tell us. So it is very powerful to look at order flow, to look at the numbers, to look at the data. The more information you have, the more insight you have as to what's going on in the market.